Welcome to TradeTheMBI.com. This is John. This report is for the 3rd of April. Well, we continue to plug away. I mean, yesterday we had a nice up move. It seemed quite dramatic, but when you look at it from a daily standpoint, it's quite small. Again, we came right to the 23%. This appears to be where, the Fed is providing liquidity through their partners, which is how they're facilitating this one, because under the new bill, it's actually the Treasury has taken over the Fed, and that's why the Fed had to hire a third party to get involved in their purchases. So it's an interesting change in who's really controlling things in the Fed now. Moves it under the executive branch in the Treasury. 2505 was our resistance. That was an easy one from above. You can stay long, but below, you've got this small range between the 23%. We're still in weakness mode now. We do see some short-term buyers. That may be enough to hold things in place, particularly with the orange fading down. That means that you really, as much as shorts are involved in this, they're not really having enough strength to push it, and that makes sense because you're up against an unlimited buyer. That particular point. NQ likewise caught right in between the two ranges, just a little bit more specific, and also same situation where you're getting a slight improvement even while shorts are rising. So that may be enough to hold it up, and then it's just a matter of getting the turn pivot, and you'll have higher DOC red on improved shakeout readings potentially, and we're just starting to see rising gold here for the NQ. We've had it going on for the S&P. And the problem with that is when you're under the 50% with rising gold, it's problematic. Usually above the 23, you have a shot if you can get a strong turnaround buy signal. We have filled positive extremes. If I go back and just look at those, and you have these ones right back over here. When you get these kind of bigger tails, I'm less concerned with trying to get exact to those, but we did fill, even just the other day, the retrace going through them. So from that standpoint, broader perspective, you've got that bigger sell signal. When we looked at the 50K charts, actually I'm going to paint more on it, but we can look at it. When it's good, it looks nice, and then you get your sell, and then boom, at the bottom, we came back with what was a nice buy signal. What it didn't recognize really quick here was that immediate spidering taking place where the green falls back below, and that took place right up here at the peaks. And it's pulled back from there, but of course this is looking much broader. But you can see the same setup developing here on the 50K. Higher shakeout there. Not shakeout, but I mean the DOC red pivot will create a P2 kind of effect, and you would expect that to then break out past this 2505, and that should be enough to create some short covering, because that's really what the plan is you create enough short covering, they drive price up a little bit, then they can sell into that, and what they'll use is basically short covering to help pay for the push up, and that's how they can maintain it, because ultimately, when we see the numbers, you've already got massive unemployment claims. Those are only going to start to climb. And then you're reaching like even a point here in Italy where it's been well over a month of quarantine. And it just logic says if you have a series of friends and none of them have gotten sick, they've not been exposed or infected. So social distancing them from everybody is just cruel in some element, psychologically at least. And I just don't know that they have a plan or an idea how you start things back up. Because if you just tell restaurants to open, well, what are they going to open to? Where's the demand for it? Particularly like in a tourist location where you still don't have functioning airlines and everything else. The dynamic of this is just an impossible thing to take something that was going full speed. It's easy to stop the train. It's a whole other thing to get the thing going again, especially when it's a super long one. And that's what you've got with this economy, that so many facets of it, that it's like a super locomotive that has 5,000 cars. Trying to get that thing going just takes a lot, and that's the problem that this is creating. And the longer it goes, I think the worse it becomes. You're already starting to see civil unrest issues in the U.S. We've had those here already in the South, and growing protests about this idea of because at the end of the day, you look at the numbers, it really isn't justified. You have 330 million people in America. The numbers you're looking at aren't quite significant enough. Now, that doesn't change the virility of the illness, and those susceptible really do suffer. So this is where the treatment really becomes significant. From a Euro standpoint, it's just a disaster over in Europe. So it's amazing that the central banks have been able to even hold it up this far. To be honest with you, it's quite surprising that they put so much into it. But the U.S. Fed is providing liquidity. And then here we talked about this. The only saving grace for oil was going to be the U.S. Government buying up whatever they can. And that's what you get when you have the U.S. involved in central bank buying of oil and that, and finding for the strategic reserve it's necessary to do, how they're going to stabilize the global supply situation when there's no demand is problematic, because the U.S. cannot give up its energy independence at this particular point, having fought so hard to gain it. So then you have the whole geopolitical considerations take place there. And the expectation for hyperinflation is going to start to grow significantly when you just create, $10 extra trillion and throw it out there backed by nothing. So we're going to continue to see movement in gold, I think, going forward. It's a quite pretty day. We had some interesting end of day action. Particularly we were talking about this one where an orange candle comes in this particular case, after you've got dips below the red line, your expectation is that you're going to revisit that low after a pop. Now the question usually becomes, well, how far before, because it can still take off. But this is where I was talking about the signaling treats this as a trade situation. But we can see the snake, the spider right here that develops after you've come up with the green, and then boom, it rejects. So in this case, we know when we have our resistance levels from previous positive extremes and stuff like that, where to react from. The program can't really react that quickly to those kinds of setups. It didn't change whether it was a buy, because at that point it met all the criteria. And it started off well. It was just the dip there. Now, of course, then the P2 comes in, which is a higher pivot of the red DOC, and then even a further pivot of the red DOC. The difficulty in this one is that at that point you don't have a steel reset coming below red, so you don't have that emphasis to really push it. Did get an X2 buy configuration right in here, and that did lead to the pop, and then you start getting cyan under red, and that led to continuation of the move until we reached the peak right there. And at that point, we had started to develop a significant number of positive extremes. So from my standpoint, I'll start with the most recent one right there, and then you go back to the next move, which was this right here, and then finally you come back all the way to the earlier ones, which they all correspond pretty closely to the existing ones that were already there from a little earlier. And we just filled in this one from the beginning of the day, which took place here in the after hours. So beautiful work that they do with these algorithms on creating those. We had the same situation with this run up. I went through and I said, okay, here's this one. Here's this positive extreme for right here, and the beginning one from right over here. And of course, you have the full dip below the red line. And, boom, one by one, once we got the signals, you ended up with those significant lower shakeout readings. After we started to get the flat gold, we knew that the second run was going to be the most powerful setup to take place. And sure enough, that's when we started filling all of these nicely, and that led to that end of day rally. But the ranges were dynamic. They were all over the place. I mean, we had so many opportunities throughout the day, up, down, back and forth, and so it's quite exciting. This was a replica of the trade from yesterday, where the orange came in, only it stayed green the whole time. In this particular case, because it had the rising gold and it dipped below the 50%, it went to the red marker, as opposed to like yesterday's that just showed green the whole time through the trade. Those are the subtle little variations, and it's always a process to go through and adjust them. And I've been making some additional changes to this PNT2 that helps refine and clarify, trying to get as close to an exact replication of what we know to see from the readings, as opposed to trying to convert it into exact standards for a program isn't as easy, but we continue to get closer and closer. I mean, got it pretty much well dialed down, and as soon as the elements for the DOC Steel Reset come in, it's just a matter of at that point you create a subroutine that will tell it that, hey, you're in a no Steel Reset, which means that any buys you do get are likely to be short-lived. So if you're not really looking at decent shakeout and stable lows, you don't really want to be involved in a long setup on that. And particularly when it comes to these yellow candles, there will be an adjustment made for those, because we certainly want to capture those areas where we have the least drawdown. Nobody wants to see red on their screen. I mean, it's inevitable as a trader, but the more we can limit it, the better off things will be generally. So let's go back to current right there, and we're just floating right in between these previous algo levels at this particular spot. Here's a perfect example of this coming right through. Yellow candle comes after the spider. That has to be correct, because we know that that's not a buy configuration in that particular setup. That's going to suffer some strain. The interesting part about that is that once you have that set up, it's a matter of looking for the first orange dip down that has the steel cross above, which is right about over here, which helps reduce the amount of drawdown, because then you just have one candle before it all pops back up again. So those are the little things. We're getting there one step at a time. As always, though, trade well. We'll talk again. I'll be on the Skype chat, so see you there.